And there is a volatility index. It's called the VIX, the VIX. And the high of last week, we got up to 28 on the VIX. We were sitting around 16, 17 on the VIX. We had a little bit of volatility, not too much. We clearly had a spike in volatility. Welcome to Life in the Markets. My name is Tim Russell, and I'm joined with Steve Verkler.
Good morning, everyone. Great to be with you.
And today is Monday, November 24th, 2025. As we look back at last week, one of the things that really stood out to me about the market was the word volatility. And now in investing, it seems like you can take almost any metric and build an index based upon it. And there is a volatility index. It's called the VIX, the VIX. The VIX index tells us how much fear or uncertainty there is about investing and where investors are on the, like maybe the panic level. And the high of last week, we got up to 28 on the VIX. Now, 28 itself is an irrelevant number if you don't know what baseline is. We were sitting around 16, 17 on the VIX. We had a little bit of volatility, not too much. We clearly had a spike in volatility. But to put it in a little bit more perspective, if you look back at where we were in the spring during the tariff tantrum, do you know how high the VIX got back then? It actually got to about 60 on the VIX. Now, we're at 28. We're not anywhere close to where we were during all of the fears and concerns of tariffs, and yet we are seeing an elevated amount of volatility. We point that out because the more volatility there is, the more likely that we're going to just have some choppiness in the markets over the next couple weeks. So we're paying attention to that. This past week, we looked at the S&P 500. The S&P was down about 1.5%. The NASDAQ was down about 2.5%. The Russell was down about 1%, the Russell 2000. Now, notice all of these numbers are down. The markets largely sold off last week. Not a big sell-off, obviously. We pulled back a little bit. We consolidated some of our gains, and we're trying to realize whether or not the prices we're paying are justifiable given the way the market's at, the way the consumer is feeling, and where we are in terms of overall market momentum. We can look a little bit deeper. We see that gold was marginally flat. It was down a little bit. Silver was down about almost 1%. Oil was actually down about 2.3% on the week. Bitcoin was the big loser. Bitcoin was down 8.8%. And I know not many of you are investing in Bitcoin. You don't hold it. It's not a big thing. I point it out because it is becoming such an important news and psychological thing that people look at and value. It's interesting to track. Now, for those of you who are paying attention, since we hit the high of $126,000 per Bitcoin just like a month ago, Bitcoin has sold off, do you know how much? 35% in the matter of just a few weeks, about 3 weeks here. So we went from 126 down to $83,000 per Bitcoin as of when I pulled the number last night. That's a meaningful difference. That's certainly something that's Bitcoin. A lot of people look at as a safe haven, maybe a good store of value. Obviously, there's still a high degree of volatility within that particular area of the market. And then the winner of the week was actually bonds. Bonds were up about 1/3%. Treasury is sitting just above 4%, the 10-year Treasury. All right. Last week, we had some earnings news. We had actually a lot of different companies saying different things about the economy. So on the positive side, we've got retailers like Walmart, Ross, Gap, TJ Maxx or TJX, which is a parent company which has numerous other retailers. They all actually showed some fairly positive signs for the health of the consumer. Walmart says that their earnings were strong, their sales were strong, and in fact, sales of individuals with with moderate to higher incomes was actually one of the fastest growing segments of their customer base. Other areas just continue to show high demand. These are value brands that are attracting a growing share of wallet from consumers that are being pinched by inflation. So it's encouraging to see some retailers are winning more perhaps than others. On the flip side, conversely, we had Home Depot, Bath & Body Works, Williams-Sonoma, Lazy Boy, Target was another one, all actually showing more stress in their consumer, more signs that the consumer is less willing to spend like they were before. All of these things are tied to inflation and consumer sentiment and consumer confidence. There was another big company that released earnings last week, and that was NVIDIA. And NVIDIA actually had a fairly positive report. It didn't amaze anyone with the things that they were able to accomplish, but what they did was in line with what they were expecting. And you know what the market did with that? Well, it sold off NVIDIA. Not because it did something bad, but because it was already priced in to the market. The good news wasn't actually good news because it wasn't fantastic news. That's the kind of market we're in right now. It's not treating everyone perhaps as fairly as we might like them to be treated. So you were telling me you had some thoughts about NVIDIA you wanted to share.
Yeah, we hear a lot in the news about NVIDIA, and some of you may be very familiar with it, but some of you may not. I just wanted to revisit what NVIDIA is. It's a company that has an outsized impact on the market many times as we look to earnings and look to how the market is performing and potentially will perform. It's an AI and semiconductor giant. Basically, it's dominant in the manufacturing of AI hardware. It's one of the world's most valuable companies.
It is the most valuable company.
It's currently valued at, and wait for it, $5 trillion. Yes, you heard that right, $5 trillion. So it takes up about approximately 70 to 95% of the market share for AI accelerators, and it makes up about 8% of the S&P 500. So there's a reason why you hear a lot about NVIDIA in the market, in the news. We look towards that. A lot of market analysts look towards that to see how AI is doing currently and also potentially the future prospects of AI. And it sets the tone many times for the entire market, as it did this week. So when you hear NVIDIA, that's what we're talking about, is AI and the dominance in the market right now currently for that.
Well, you're absolutely right, because what happens with NVIDIA and AI tells the rest of the businesses out there who are investing in AI whether or not their investment ideas will be profitable. If NVIDIA can do it, then they probably can do it too. If NVIDIA fails in their efforts, it's not likely that Apple or Alphabet or Microsoft or Amazon, Broadcom, Meta, Tesla, which, by the way, these are all the other companies like going right down the cap stack. These are the largest companies in the world. They're probably going to struggle too. So I find that really interesting. It's a good point, Stephen.
And another thing we were looking at last week was the potential of interest rate cuts coming up. And it seems like we talk about this a lot. We've been talking about this for the last couple of years, it seems. And what happened last week was the minutes were released from the last meeting of the FOMC, which is the Federal Open Market Committee with the Federal Reserve, and that's the 12 members that vote on interest rate cuts, as well as many other things, as well as far as monetary policy. And the minutes were released from their last meeting in October, and it showed that there's a lot of division on that committee right now. So they're not unified necessarily, and there's a lot of uncertainty in the markets. Actually, the odds for an interest rate cut coming up in a couple of weeks were all over the map last week. We started the week at 70%, dipped to 30%. Now I believe we're up to 60%, close back up to 70% again, based on some of the market information that was released last week and the data that was released.
Yeah, 75 right now.
75 right now. And the next meeting is December 10th, and that's coming up in a couple of weeks. And that will be important to look at as they're looking at jobless claims that were released over the past week that were actually from September, but were delayed because the government shut down. So they don't have as much current information as they usually do when they make these decisions. So it'll be very interesting to see where they land. There's actually been talk, I just saw in the past few days, of potentially a deadlocked FOMC vote on the interest rate. And that's not usually something we hear a lot about. So that'll be very interesting the next couple of weeks to see. There are about 3 or 4 appointees on the FOMC that were appointed by Donald Trump, and he is very much in favor of an interest rate cut. So the next couple of weeks will tell us a lot. There are a lot of mixed signals coming from them, from different members, so we will see what happens on December 10th, but that's a date to look for as we look forward to potential interest rate cuts in the next couple of weeks.
Yeah. So you mentioned the employment report that came out for September. Bottom line with that report is it's old news. Don't worry too much about it. We did see the unemployment rate tick up a little bit. We had more people. We had slightly more people file for unemployment, but we had with that more people entering the job market looking for jobs, which is what caused it to tick higher. Now, from a lot of reports that I've been reading over the last several days, one of the things is talking about inflation and tariffs. And this one report says the input costs of inflation have accelerated sharply in November. And this is all tied directly to tariffs. Now, tariffs started in May, but they really started to accelerate and kind of hit companies more impactfully here in the month of November. Tariffs are the predominant reason cited by companies for increasing product costs alongside raising payroll costs. One other note is that from the University of Michigan, they do a consumer sentiment survey, and just this one note from the survey I thought was really interesting, and it shows that what's happening in the markets is hitting different people differently. It says that interviews revealed a considerable difference in the economic views across the wealth distribution. This month, the majority of consumers without stock holdings and those with the lowest amount of stock holdings spontaneously mentioned higher prices as a drag on their personal finances. Translation. They're doing surveys, they're talking to families, and one of the things they're asking is how much do you have invested? And those who said, I don't have anything invested, or those who said, I don't have very much invested, every one of them, almost every one of them, I should say, seemed to indicate that the raising cost of tariffs and inflation are a significant drag on their personal finances. That's really interesting. Then he says, but in contrast, only 1/3 of consumers with the highest amount of stock holdings said that inflation was a problem. This gap reflects the difference in degree of pain that inflation is causing on the various types of households. Again, it's something I find particularly interesting that not everyone is feeling the effect of inflation the same way. As we close, we're heading into Thanksgiving, and Steve, you wanted to share with us a little bit about what to expect this week in the markets.
Yeah, this will be a unique week. The market will not be open all week. On Thursday, in honor of Thanksgiving, the markets will be closed, and Friday will be a limited trading day. Stocks will be open until 1 o'clock, and the bond market will be closing at 2 p.m. on Friday. So this will be a unique week. It will not be a full week, so it's important to note not to take too much away from how the week is in the markets. I think it'll be interesting to see consumer spending and how retail sales look. That might give us a good indicator.
I mean, we got a big Black Friday coming up, so obviously that's a big day in the retail calendar.
Right. So the trading volume will be a lot less than it normally is this week, but it'll be a very interesting week to see, especially towards the end of the week, Wednesday and Friday, what the numbers look like.
Yeah, interesting. Well, here at the Life Financial Group, we're obviously not going to be open on Thursday. We'll probably have a lighter staff on Wednesday and a lighter staff on Friday, so just bear that in mind if you have any servicing needs. Closing verse for you today comes from Romans chapter 1, verse 21 and 22. And it may be a little counterintuitive, but let me walk you through this. It says, for although they knew God, they did not honor him as God, or pay attention to this next phrase, or give thanks to him. But they became futile in their thinkings, and their foolish hearts were darkened. Claiming to be wise, they became fools. What is the biggest differentiator between someone who is a follower of Christ and someone who is not? According to the book of Romans, the biggest differentiator is thanksgiving. Do you give thanks to God for what he's given you or not? So here's the challenge for you this week. we're heading into Thanksgiving. Give thanks to God. Think about all of the good things that God has given to you, not only through the bad things, how he sustained and provided and given hope, but also through the good. Look to God, rejoice, share these stories with your family. Rejoice together in the goodness of God, and make sure you do a wonderful job giving thanks this Thursday. Until next week, take care. Be safe in the markets.
Be safe in the markets. God bless.
The topics discussed in this podcast are for general information only and are not intended to provide specific investment advice or recommendations. Investing and investment strategies involve risk, including the potential loss of principal. Past performance is not a guarantee of future results. All information herein is from sources believed reliable, but is not guaranteed for accuracy or completeness. The team assumes no liability for any errors, omissions, or actions taken based on this material. Information is as of the date stated and subject to change without notice. Securities and advisory services offered through Genius Wealth Management. Member FINRA and SIPC.